Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Cerrado Gold. Cerrado Gold is traded on the TSX.V under the ticker CERT and on the OTCQX on the ticker CRDOF. And I'm joined today with the founder and CEO of Cerrado Gold, Mark Brennan. And Mark, it's always great to get you back on the show. We talked last month and had a nice update on your Q1 financials and got into some of the other projects. Just as a reminder for people listening in, the company has three key projects. They have the Minera Don Nicolas project in Argentina, which is a producing gold mine, the Lagoa Salgada project in Portugal, which is a critical minerals development stage project. We'll get into some of the updates there later in this call, and also an iron ore project in Quebec, the Mont Sorcier project. And so we'll get into all three projects today. But Mark, I want to kick things off with the news that you put out to the marketplace on July the 17th. And this is on your Q2 2025 production results in Argentina at your Minera Don Nicolas mine. You had 11,437 gold equivalent ounces for the second quarter. You're down into the underground now. You're into the development there, and you've commenced production. I want to turn it over to you just for the key highlights and takeaways you want an investor to know about how operations went at Minera Don Nicolas in Q2.
Q2 is going very, very well. And thank you, Shad, for having me on. It's always great to be here and to go through the updates on Cerrado. But Q2 was a very, very good quarter for Cerrado on a number of fronts. And if I look at Argentina at M.D.N, we continue to aggressively drive an operation that looks like it's going to have long-term sustainability. And the first thing, obviously the core of our production today is consists of the Heap Leach operation at Calandria Sul. And at the Heap Leach operation, we had a record in the second quarter of production from the Heap Leach operation. We anticipate that'll continue, and we'll continue to see production ramping up from approximately 3,000 ounces. And our target is to be on a monthly basis, and our target is to get up to about 4,000 to 4,500 ounces per month. We've really been focusing on our expanding our crushing capability. We actually removed a lot of leased equipment, which was expensive, but also didn't have the capacity to drive the 300,000 tons per month that we want to drive there in terms of crushing. And we are now consistently at that 300,000 tons. And when you're doing heap leach operation, aside from the recoveries, the real critical element is to make sure you can get enough material on the pad. So now we're at that very comfortable rate that we're at to get to that 3,000, to 4,000 to 4,500 ounces per month. We're also bringing in an agglomeration capacity, which will help us with recoveries, and so that should improve our gold production as well. So we're very, very pleased with what we're seeing happening on the crushing side and the heap leach operation. Second, we also announced and we've actually progressed with underground development. This is the first time that Cerrado and M.D.N has actually gone underground at M.D.N. As you know, most of the competitors and the big producers around us, of which there are many with Anglo and Newmont and Pan American, most of them have a substantial portion of their production coming from underground operations. We see lots of opportunity to grow our underground operations, but in June we started the development of the underground operation at Paloma. And basically what we're doing is Paloma's an old open pit mine that we had produced for about 3 years with very high grade, anywhere from 8 to 10 grams. And basically what we're doing is going into the bottom of the pit, and we've opened up 3 portals, which right now we're just securing and doing shotcrete and making sure that it's a very strong, safe environment for us, our workers to go in. But on top of that, we're developing through ore. So for the month of June and July, we're seeing actually production occurring. It's de minimis. But what we're doing is we're developing in ore as we move towards the higher grade veins. So we're drifting towards the veins, which will give us, probably by September, we'll be into good high grade drifts, which will give us grade that I would think will be anywhere from 8 to 10 grams per ton at a minimum, as we had produced in the open pit operation. So that's moving along very, very well. And then on top of that, we're also looking at exploration at surface, which is also helping us to look at near-term opportunity to bring production into the plant through low-grade stockpiles and other means. So from that regard, if I look at the complete picture on the production side at M.D.N, Heap Leach is starting to go gangbusters, which is really great with record production in the second quarter. We expect that production will be, again, more record production in the third quarter. The underground, we're going to see that start to really expand and increase. And then hopefully we'll see some addition to the low-grade stockpiles or even the stockpiles. They don't necessarily need to be low-grade through additional exploration. And that exploration is separate and divergent from a significant exploration program that we've embarked upon at the end of the second quarter. And this program, our target by year end is to add about 300 to 700,000 ounces. We've got a rig dedicated to the program to drill 20,000 meters by the end of the year. And so far we're starting just north of the Paloma plant, it's the Paloma mine, excuse me, where basically the we're seeing some good showings, but it's still very, very early days. So all in all, a very, very good result coming from Argentina.
Well, Mark, let's dig in a little bit more to the exploration plan and just hats off to your team. It's an exciting time to be on the production side, not just doing the open pit, but getting down into the underground. That is a phase of a mine where it's still very early days. We should remind people listening. But to your point, a lot of your neighbors have been underground and at surface for decades, and these things can go very deep. And so it's still early days, which brings exploration into the equation here. You've maintained that you started this mine in a difficult time to build a mine during COVID, and you've been ramping up, but now you can really stretch your legs a little bit more. The gold price is giving you fatter margins. You're getting into that higher grade material probably in Q3 for the underground, but now you can put some money into the exploration program. You've got a 20,000 meter program. Give us some more color around how you can expand this project.
Well, I think our objective right now, again, is if we can add 300, 700,000 ounces to our resources by year end, basically what we're looking at is that extends our mine life probably 3 to 5 years. And that gives us, something in the region of anywhere from 6 to 8, 9 years of mine life, which would give us even more room to put our legs up, as you say. But the strong element here is that that's really just looking at surface. We have lots of different areas that we see the ability to go in and explore. We haven't had the capital previously, but with these higher gold prices, it's really giving us the ability to go and spend money on exploration. As I say, we're doing it right now. We're budgeted for 20,000 meters before the end of the year, and that's exclusively to the open pit operation. We probably moving into September when we get to our drifts. We start doing our drifts. Basically, we'll start putting pads down where we can actually do further exploration underground, where we hope to see better resources coming into the equation. And those are not included in our target 300 to 700,000 ounces. So I think, suffice to say, in our presentation, there's a really good slide that shows, to your point earlier, that there are companies like Anglo who have been here for decades, Newmont, now Pan American after their acquisition of Yamana. The reality is that there's some big guys all around us, near us, next door to us, and they've been able to, through their other operations, they've been able to finance strong exploration programs, et cetera. And that's what now we're getting for the first chance, an opportunity to start really moving the exploration forward in a disciplined and sustainable way. And I'm very hopeful and very positive that we'll end up yielding some very good results.
Well, it's exciting to follow along with. And as you hit the drill bits and get in there, well, I'm sure we'll be talking in the future about some of those exploration results. But I think the key takeaway is that you're really hitting on all cylinders in Argentina. You're hitting at the open pit level, you're hitting at the underground level now. That's going to only grow. Eventually, you'll be drilling from underground too down the road. So there's going to be a lot of development, a lot of production increases, but then also a lot of exploration news out of Argentina. Number
Let's just
two.
add, sorry, I just want a component too. And we're doing all this while we're dramatically reducing our debt. I would imagine that our debt load by year end will be somewhere in the region of about 15 million. Most of the debt that we held within Cerrado was held at the M.D.N level. So that operation is becoming very, very robust financially. And that's also a really important element to the equation.
Yeah, I think people listening in will be happy to see that the debt levels are coming down over time. So, a lot of good things happening out of the production from Argentina, which is really fueling a lot of the other development and exploration in all the projects. Let's shift over to Portugal, though, to the Lagoa Salgada project. Now, for people listening in, this is a polymetallic project. It came from the acquisition of Ascendant Resources, and you've got gold, silver, zinc, copper, tin, a nice mix of metals here, still very heavily weighted to the precious metals, as we've discussed in prior discussions. And you've wrapped some economics around this project at the feasibility level. But you put out some news just recently on the 14th of July talking about the permitting and that you're, revising your EIA, which is your environmental impact assessment, to the Portuguese Environmental Agency. I think from a high level, maybe walk us through this, but this key takeaway being this is really good news because it means you're able to submit basically a slight revision to it as opposed to starting the whole process all over again. So walk us through this permitting update.
Yeah, and to your point, I mean, we still retain about 40% of our payable production will come out of the silver and gold side. And on top of that, we have critical minerals, which are really important in this day and age with the electrification and governmental supplies. We're very excited by this project. And just to give you, before I go into the permitting kind of element, we're just in the final stages of a feasibility study that we expect to have results back on probably by the end of September, October timeframe. And we expect to see, we're just completing the metallurgy. The metallurgy has seen dramatic improvements from previous work that we've done. So from that perspective, we expect to see better recoveries, better grades, bigger reserves, so much more robust path towards a much more robust feasibility study. But to your point, we're expecting an imminent approval of our environmental impact assessment that we initially filed in the fall of 23. We revised it in the fall of 24. Not revised it, but we supplemented it as the process goes in the fall of 24. And we had initially expected approval by the end of the first quarter of 25. We received a review by the APA, which is the regulatory agency for mining in Portugal. I'll say that we're one of the first projects that all the technical reviewers provided unanimity for the approval of the project. However, there were a couple of points that when it got to the board were a little bit, they wanted some adjustments too. And the first one was the use of cyanide. In some of our gold and silver processes, we're using cyanide to leach the gold and silver. And for some reason, even though the technical body don't necessarily disagree with the use of cyanide and the fact that it would be contained and it's a small component of our production, the board just did not want to have cyanide at their operations. And while not necessarily technical, as I mentioned, it really more political. And from that perspective, when you start saying cyanide anywhere, whether you're in Canada, Brazil, Argentina, Europe, they just don't like cyanide. And from that perspective, we decided long ago that we weren't going to use cyanide anyway. So really, it's not an issue. In our metallurgical testing that I mentioned to you, we're just about complete on. Probably in the first quarter, we had moved away from cyanide for flotation. So not even for political or environmental issues, but really more for economic issues. So for us, we find it much more economic to using flotation as opposed to cyanide leaching. So from that perspective, it's a non-issue. The second thing was we will be driving a ramp down to a north zone and a south zone. Within the first 10 meters of that ramp, we have aquifers that basically support the local community's water needs. And, we had already in the feasibility study made absolutely clear that there would be no threat to that water supply. And the board basically asked us to just reconfirm that and to redoubt our efforts on that. I will say that, as far as any mine in Portugal, we have the most robust and most in-depth water studies of any project that's been brought into commissioning to date. And we are very confident that with our resubmission, that we will have satisfied the board of APA with respect to the water safety for the community. Again, no matter where we operate on basic principles that safety, environment, benefits to our stakeholders. A large part of our stakeholders are local communities. We always make sure that everybody's well-being is being taken into account. But anyway, nonetheless, our expectation is that under Article 16 that the board of APA allowed us to resubmit our EI on. It's almost an implicit approval, which is from our perspective viewed very positively, from the perspective that we take it to mean, okay, you make these changes, and if we're satisfied with these changes, then we can proceed with the project. We will resubmit the new EIA in probably late September, early October. We expect it'll take about 50 days to get that approved. So let's say by January of 26. And then we enter the recape phase that we expect will be approved within 60 days. We're in the recape phase. It's when you do the detailed engineering. It's when you do the work to the detail work on making sure that the project complies with, in terms of its design, complies with what you had set out to the agencies. We're already doing that work. That work will be included in the feasibility study. So from that regards, we see no reason why when we resubmit for the recape in January, that we shouldn't see approval very early in the second quarter. We would target sometime around April. And once we get that approval, we will be off to the races in terms of the construction. We still feel that it's viable that we can be starting construction in the second quarter of 26, which means that we should still be able to conclude our production or have initial production by the end of 27. So from that regard, it's not going to dramatically change the schedule, but these are hoops that you have to go through. Getting a project permitted and approved in any jurisdiction, whether it's Europe, Portugal, Spain, Europe, South America, North America, anywhere. It's always a very complex process, and there are lots of variables that are involved there. And as I'll remind people that we are a project of national interest for Portugal with the strong support of the government. So we just have to make sure that we're doing our part and making sure that any criticisms or any fallout that could apply even on the political stage, that we're looking after everybody. So from that perspective, we're very comfortable that we will see this project again continuing to construction sometime in the second quarter of next year.
Well, I appreciate you laying out the roadmap there of the timeline of how you think things are going to fall. And yeah, I was going to bring that up if you didn't, that you already are a project of national significance. So I'm sure that as you send in these revisions that, like you say, it's going to be an approval process after that. And this is always part of the permitting process for any mine that has to be built. So you're well on track to have construction start the middle of next year and production start 2027. And again, you're going to have a nice suite of projects still focused on the precious metals, but with a nice suite of critical minerals. But one more question, just following up on Lagoa Salgada, is how you're going to put the capital stack together. I know that you've been in discussions with Sprott, looking at options there. You also have a great relationship with some financial institutions coming up with the offtake side of things. So just remind people of how the capital stack is coming together for Lagoa Salgada.
Sure. We have UKEF and Santander who are looking to support us for 70% of our project needs in a project finance. We have, as you mentioned, Sprott are there saying that they're interested in looking at funding up to $50 million there. We're looking at an offtake. We believe we can get approximately $10 to $15 million in an offtake. We will have our own cash available by year end to potentially put up for any supplementary cash required. So we think we can do this without diluting our shareholders, if that's the best route to take.
Appreciate that. And just letting people know that the pieces are coming together to get this thing into production the next couple of years. So that's an exciting second project for the company. But you still got a third project, Mark. Let's definitely squeeze in Quebec. You've got the Mont Sorcier Iron-Vanadium project. Now, this is a project that's maybe doesn't get as much airtime for the company, but we're still going to talk about it because there's a lot of optionality you have in this project. It's a high quality iron, as you mentioned before. Maybe you can highlight that for folks, but you're working towards the feasibility study there, the bankable feasibility study in the very beginning of next year. So talk to us about Mont Sorcier, the value proposition, and the upcoming feasibility study.
We think Mont Sorcier is probably one of the most robust iron ore projects around. It's a high purity, high quality green steel, critical mineral. Quebec's largest export is iron ore. We think it has some relevance and requirement for the province. However, what I'd say here is that on its own merits, the infrastructure is all in place. Now what we need to do is really just drive the economics, and we're doing a feasibility study targeted to be completed by the end of the first quarter. And from there, we're looking, to follow up on a PEA that was completed in 2021, where basically we had an NPV of about 1.6 billion based on capex of about 600 million. We think that there'll be some inflation due to the number of years that have passed. However, this project, in our view, has the ability to throw up 300 million of free cash. It's the equivalent of about 300,000 ounces of gold. And again, just like with Lagoa Salgada, we believe that with Mont Sorcier, we can fund this project with minimal dilution to our shareholders. So that's the objective that we have right now.
Well, it's an exciting value driver for the company, and people hear iron and think, oh, but it's like you say, it's a different, higher quality, higher spec iron, and it's highly sought after, and it just gives the company another value driver. Honestly, if you look at what the NPV is in any of these projects, they all underpin your current market cap and valuation. So whether you were talking about just Mont Sorcier, it already underpins your value. If you're looking at just Lagoa Salgada, same thing. And then obviously you've got a producing gold mine in Argentina. So final question here, Mark. The valuation, to me, when I look at your valuation, it seems very undervalued when you think of the sum of the parts here. But how do you present the value proposition to investors when I think you're trading at a significant discount to your peers just on the gold project, not even counting the other two projects?
I think that'll change over time. And I think once we start to see that we have Lagoa Salgada funded, we're expecting an NPV approximately of $200 million. These projects trade funded at somewhere in the region of zero point 0.8. That's another 150 million US that you can add to the equation. The reality is that, we're just putting our heads down. We're working hard. We know the value will come. It's just hopefully sooner rather than later.
All right. Well, you're going to have a lot of news flow coming out of the company over the balance of this year. So we'll definitely keep following along with it here at the KE Report. And for those of you listening in, definitely click on the link below in the show notes. It takes you over to the Cerrado Gold website, straight to their news section, where you can sign up for updates, have them hit your email inbox, or just follow along with the news as it drops. Mark, keep us posted. We'll get you back on for an update. And as always, looking forward to our next conversation.
And you, Shad. Thank you.